On your thumbs up meter. Deep value. Good morning, Uncle Bruce. Is there an ideal price at which GameStop should issue a warrants offering? Oh, I would love to see a warrants offering. Let's say at $22.50 a share, $25 a share. That'd be great. Do a 4-for-1. So you get one warrant for every share you have as a dividend. Free gift. It's listed. They trade on the open market. For every 4 warrants that you put together, you could buy one new share of the company at, say, $25 a share. I'm just picking up. Ryan Cohen and Jeffries and Company comes out and announces that whatever warrants you don't exercise as shareholders on the day of expiry of those warrants, whatever warrants are not exercised will be exercised by Ryan Cohen or by Jeffries or whoever. So it's a bought deal. It's a done deal, whether you buy the shares as a shareholder or you don't. Now, what does this mean? What would this mean? It would mean that the company could increase its float by 25%. You could go from 70 million shares outstanding, whatever the float is now. You could go from 400 and some odd million shares. Where's that number? 426. So 25% more stock could be outstanding. So that would be 105 million more, 105 million at 25 a share, which would raise $2.5 billion additional cash. It would put this company at $6.7 billion in cash with 550 million outstanding. You'd have over $6 billion. You'd have more than $10 a share in cash. You'd be over 11, maybe $12 a share in cash. Okay. So let's say I think the market would like this announcement. The market, I think, would really like this announcement because the market will go, oh my God, these guys are going to raise 2-point-something billion in cash no matter what. If no shareholder buys a single share, they will still raise this much more cash. The stock will trade higher, no doubt about it. And so if it went up to $29 a share, each warrant would be worth $1 in book value. It takes 4 warrants plus $25 to get another share. Well, if they're trading at $29, that's a $4 gain from 25 to 29. 4 warrants, that's $1 a warrant. These are like call options. And if these warrants are good for 90 days, 180 days, 120 days, 2, 3, 4, 5, 6 months, they hang around, this would be a showstopper. These warrants will trade millions a day every day. Gazillions will trade hands. Gazillions of them. The stock will go up. Now, if the shares go up to $33 a share, $33 a share, that would be $8 higher than the strike price of 25. The warrants would be worth $2 each book value plus time premium. So they trade around $3 each, would be my guess. And every shareholder would be handed 1 warrant for every stock they've got. So now the shareholders are going, well, I got 5,000 shares. I just got 5,000 warrants given to me. And they're trading at $3 each. I can just sell them for $15,000. That's right. That's right. You get 5,000 shares, you can just sell the warrants and get 15 grand for them. Now, what do you do with the 15 grand? Whatever you want. Whatever you want to do with the 15,000. You could buy more stock on the open market and write options on them if you want, or you can write cash secured puts, or you could buy deep in the money calls on top of the shares you have and write on those. It's up to you. Put the 15 grand towards a credit card. I don't care. The market doesn't care. No one cares. Or you might go, well, wait a minute. I got these for nothing. I can buy stock at $25 a share if I want. I got 5,000 shares. I can buy 1,250 more shares at $25 a share. They're trading at $33. You could do that, and then write options on those contracts right away. It's up to you. If the stock were to go up to, say, I'm trying to come up with a nice clean number. If the stock went up to $45 a share, the warrants each would be worth $5 book value. 4 warrants at 5 each is $20. There's the difference between a $25 stock and a $45 stock. The stock trading at 45. The warrants would be worth 5 each plus time. They probably trade at 6. Every shareholder would have a $6 warrant for every share they had at 25 a share right now. Now, anyone that's short the stock, if you're short 1 million shares, you're now short 1 million warrants. You owe 1 million warrants to the market on top of the 1 million shares. You're now upside down, the warrants and the stock. That's why the warrants will trade at a premium. They will go up in value and trade at a premium. The shares will go up because the street will go, ha ha! Everyone that short the stock is short a warrant too. Oh my God, we're talking 40 plus million warrants that are shorted that have to be picked up. This will run this market like you cannot believe. The stock would go to 45 a share, and at that point, the street will go, well, wait a minute, when these warrants expire, the company is sitting on $6.7 billion in cash. At 5% interest, they're going to haul in almost $350 million a year in interest, $7 million a week, $1 million a day in interest will come into the GameStop cash registers. $1 million a day of interest on government debt. There's no risk here. There's no speculation on that payment of interest. $1 million a day. That's $90 million every quarter when they announce their every quarter's results. $90 million is income already from the money. How did we do in the stores? And if the stores can make $50 million a quarter on average, cleaning them all up like they are, they got a $140 million a quarter company coming in the door, which is $560 million a year in profit. $560 million a year in profit, and on 500 million shares, $1 a share profit. Just doing nothing, just interest only. For Ryan Cohen, if he had to exercise half the warrants, half were picked up by the shareholders, and he picked up the other half, he would now add stock to his portfolio. He would now add, what would that work out to? What did I figure out? A quarter of the stock is 105 million shares, 50 million. He'd buy 50 million more shares. Yeah, he'd go from 30-something to 80-something. He'd be a huge shareholder. See what I mean? If Roaring Kitty exercised all of his warrants, he would add 25% more shares to his kitty, to his portfolio. See what I'm saying? Yeah, this is a game changer. Oh, yeah. Now, what they could do is that they could issue a quarter warrant as a dividend. You're a shareholder, you have 1,000 shares, you will be given 250 warrants. And each warrant can be exercisable with $25 into the stock. So it could go that way. So it doesn't really matter. However the method is done, it's still a 25% increase in the float of the company for cash. So if you've got 1,000 shares, you have 250 warrants, the stock is trading at 45 a share on the excitement of it all, your warrants are worth, I have to do the math in reverse, I think they're worth $5 a piece. And you've got 250 of them. You're up money. You're a happy camper. So there you go. It's unbelievable. It's just unbelievable. Any of it? No, your warrants might be worth $20 a piece actually. So each warrant you have is worth $20. You got 250 of them. You got $5,000 for warrants from 1,000 shares. Exactly. It's the same money, same net money to you if the stock goes up. Doesn't matter how many warrants you have. It's a question of the ratio. That could happen. That would be this story right here. This AMD is having a bit of a run today. H. Gregory, Uncle Bruce, as of late, I've been having problems picking direction on credit spreads. Stocks are overbought. I'll write call credit spreads, and when oversold, vice versa. Is this in this perma bull market? I keep getting burned. How should I close a put or call credit spread as far as direction is concerned? I would definitely be way ahead or way behind the market On the put side, I would be 10 to 15% behind. And on the call side, I would definitely be 10 to 15% ahead, without doubt, depending on the volatility of the market. Brian, a number 170 on the thumbs up meter. Bruce, good morning. Trade update. I closed out my $25 and $40 cash secured puts that were expiring today. Yesterday, I brought in $1,700 for 2 weeks. Sold new cash secured puts July 5. Those are 26s for $259 times 11 contracts. I like this. So almost $260 times 11. $2,850 fresh cash. Thank you very much. Deep value. Thank you, Uncle Bruce. Very enlightening. There you go. Yes. Oh, yeah. A warrant offering of that kind. A 1 for 4. Oh, my God. And if it's a guaranteed buy, which can be done, oh, my God. That's $6.7 billion in cash. End result. In 60 days, 90 days, 120 days, whatever the time frame for the warrants are, that is the end game. The company will be then sitting on the potential of $6.7 billion in cash, and they're going to be holding in almost $1 million a week in interest. Done. End of discussion. No speculation anymore. No, oh, I wonder if they can sell those. No, it's a done deal. It's a bought deal. The stock will go beyond 25. It will go up because the market will go, oh, these guys are $6.7 billion. You know what they can do with that? They could buy 40% of Best Buy. They could almost buy and control a Best Buy. They could merge the two together into one. Might not be a good idea, but that's kind of power we're talking about. $6.7 billion in cash. You know how many companies that they could own 10 to 20% of? In the S&P 500, take a look at the size of these companies. $6.7 billion. You want to own a fifth of a company. You're now going after $30 billion or so companies. $30 billion market cap companies is what you're shopping for. You're going to get 20% of something like that. You'll be the dominant shareholder. You'll be the controlling shareholder of a $35 billion corporation. That's the power of $6.7 billion. And for them to be able to raise another $5 billion behind that, a no-brainer. Because if you're the dominant shareholder of a $35 billion company, you can raise another $5 billion cash like that and kick butt. I mean, this is a game changer for GameStop, but the market doesn't. Wall Street won't. The shills, you're not going to read articles about this. You're not going to get anything like that. No way. Maybe around here you'll hear about it, but nowhere else. There you go. Are we having fun today? This is good stuff. What else is going on here?